Hi everyone, this is Tyler from ORATS and welcome to our Indicator Spotlight video series, where we break down our most popular proprietary indicators. Today we'll be going over one of our core indicators, ivSpyRatio. We'll go over what this indicator means, how it can improve your backtest results, and how it's calculated. Let's get started. On my screen, I have the backtest report for a short put spread on Apple. I've added exit at a profit target at 75%, and I also staggered the backtest every 5 days using the intradays parameter. This allows for multiple trades to be on at the same time, but the backtester will stagger them every 5 days to help smooth results and avoid path dependency. I ran another backtest with the same parameters, but added the ivSpyRatio indicator trigger to help filter out bad trades. The strategy ended up having nearly the same annual return, but with a far better Sharpe ratio, lower volatility, and fewer drawdown days. It also saw improvements in best and worst monthly and annual returns. With such a distinct advantage over the backtest without triggers, you might be wondering how and why the ivSpyRatio indicator is so powerful. Let's start by diving into the equation. ivSpyRatio is defined by the following. The ORATS 30-day implied volatility of the underlying X earnings divided by the SPY 30-day ORATS implied volatility. Let's look at the first variable. ORATS calculates the 30-day implied volatility of a stock using proprietary historical volatilities derived from intraday data. These produce more accurate daily volatilities than the traditional close-to-close method. In turn, we are able to generate more effective forecasts and other useful data sets. We then utilize our sophisticated methods of term structure modeling to take out any effect that upcoming earnings may have on the implied volatility of the stock. The ratio to the SPY implied volatility is where this indicator begins to draw its meaning. Since Apple stock is a huge component of the S&P 500, any significant difference between the ETF's implied volatility and Apple's implied volatility is worth investigating. Let's head to the Chart tab and pull up Apple stock and add the ivSpyRatio indicator. We'll look at the last 2 years as an example. Around late August in 2020, we saw this indicator jump up higher than around 2, which means that Apple's implied volatility was nearly double that of SPY. We can dive further into this by pulling up the implied volatility of each stock separately. We can see that within the same time frame, SPY stayed within its normal range of implied volatility, while Apple went outside of its normal range, hitting a peak of 60%. Let's head back to the original chart and explore why a high value of this indicator would suggest a bad time for this trade. Since we are backtesting a short put spread, which is a bullish strategy, we want implied volatility to stay relatively constant and predictable. Ideally, if our bullish forecast is correct, the price of both options will decrease over time and eventually expire worthless. However, if implied volatility unexpectedly rises, we could be at a greater risk for a price swing, which would be bad for our bullish short put spread. This is exactly what happened during August and September 2020. A lot of volatility in a short amount of time, which is precisely when we want to avoid being in this trade. A critical thing to remember is that this indicator already takes out the earnings effect. This means it's already compensating for the natural spike and fall in implied volatility that occurs when earnings are announced. By doing so, we can accurately compare the implied volatility of an ETF with no earnings to a stock like Apple that has earnings. We can play around with the trigger settings for this indicator to find the best values we can plug into our backtester. In my testing, I've found 1.82 to be a good max entry trigger and 1.985 to be a good max exit trigger. Mainly, we are trying to find values of the indicator that avoid periods of unwanted stock movement. Don't pay too much attention to the green and red highlights on the graph, since those are only considering a long stock position. We are going to test on a short put spread, so the returns will be different. Let's plug this into the backtester. I'll pull up the report from the original short put spread with no indicator triggers. Click Edit and then click Edit Additional Parameters. First go to Entry Indicator Triggers, click Add and search for ivSpyRatio. Enter 0 for the min and 1.82 for the max. You can leave the symbol field blank since it will default to the underlying symbol. Now let's add the exit indicator trigger. We'll do the same process but in the exit parameters tab. The min value for this will also be 0, and the max will be 1.985. The backtester will only enter the trade if the reading for the indicator is between 0 and 1.82. The backtester will exit the trade if the reading is below 0 or above 1.985. Let us know what you think of this indicator in the comments below. Please subscribe to our channel if you'd like to see more ORATS proprietary indicators. Thank you for watching. I'll see you next time.